All right, hello and welcome to Camel Finance. I'm your boy Camel, and I've got with me today Sawcruhteez. So, Sawcruhteez, I'm a huge fan, to be honest. I've shown the weather report a bunch of times on the channel. I've spoken about Hyperwave Theory a bunch of times, so this is a real honor for me. So, thank you for being here. I know we had a little mix up with our timing conversions and stuff like that, but I'm really grateful that you can be here today, and I'm really looking forward to seeing what you got to present for us. So,
Um,
it's excellent to have you here. Thank you for being here.
yeah, thank you very much for having me. It's a pleasure to be here. I've seen a lot of the stuff that you post on X comes up on my feed quite a bit, and seems like you're doing some great work yourself. So thanks for the kind words, and um, glad to glad to be here to take a look at some charts. It looks like it's been an interesting afternoon with the price making a sharp move to re-sniff the all-time high. So it'll be a good time to do a stream.
Awesome stuff. So, can I first ask you to have you got a hyperwave chart? Are there any hyperwaves you're looking at? That for me is the thing I've got to know. Are there any you're tracking at the moment? Are there any that you see? Do you think Bitcoin qualifies as a hyperwave in its current state?
Um, yeah, that was definitely the first thing I had written down to go over. And um, I only trade crypto. I really don't do anything in traditional finance. I'm sure, in fact, I'm very confident there are a number in stocks and that sort of thing. But unfortunately, I just don't trade them, so I don't really pay that close attention. It'll just sometimes people will send me a chart and ask me if I think it qualifies, and say yes or no. But for your channel, I think, and most people, crypto is what they care about most, and Bitcoin is certainly in a spot where I could easily see it, some hyperwave lines being drawn. But I'm actually of the opinion that we are in more of a normal parabolic sort of structure. And I will go ahead and share my screen and tell you exactly why. So here we have just looking at a Bitcoin weekly chart. And as you can kind of see here, that you definitely could look to draw in some phase lines starting here and then going to like something like that, saying like potential phase two that maybe got front run a little bit this last time around. And I don't have much of a problem with that view, but I think it may not be the best parabolic structure that we could look at. There are a handful of parabolic structures. Hyperwave is only one of them, maybe a blow off top or a more normal parabola or other forms of bubbles. And the main reason why I myself am not loving the idea of this being a hyperwave is because the most important phase of any hyperwave is always phase one. And that might seem a little counterintuitive at first, but it really makes a lot of sense because the longer that you have a phase one that just goes nowhere, the longer that it and tighter that it is, the more pressure that it builds for the following move. So if we take a look back at the textbook hyperwave that occurred in 2017, notice this phase one that occurred for like years on end. I mean, 3 years we were trapped down in this range, let's say between like 3 and 900, and that's a 300% difference from top to bottom, but still it's relative to the prior moves and whatnot, and the volatility, especially in the early days. That is a really tight, narrow range relatively that lasted for a really long time, and that's what really gave us this kind of springboard to shoot up into clean phase 2, 3, and then eventual 4. So that is the main reason why I'm really hesitant to be overly convinced of like a hyperwave hyperwave structure, because that phase one is the most important by far. And if we look at like the last cycle in 2020, that was a parabolic move, I would say it was like more of a blow off top than anything else. And there really was never a very clean phase one. I mean, you could definitely look at that, which was multiple years, and all the trading was below that range. Um, so that could have led to a more of a hyperwave, but it really just led to a blow off top. This time around is even less of a phase one, much less time, and that's kind of the key for me when looking at phase ones is really how long is it sitting idly while everybody loses attention and forgets about it, and while big money whales are able to quietly accumulate as much as their heart desires. But what is really interesting is I think it's a pretty darn textbook parabola. If we just take a look at this curve and kind of start at the bottom here, and then let's see, we're going to want to connect it to there, and then something like that. I think for me, I think this is the best structure to consider. I think we definitely are in a parabolic move, and it's still, I mean, really relatively early on. I mean, if it is a parabolic move, we still haven't even doubled from the prior all-time highs. So that's one that could morph in the time that comes. The parabolic structures are the hardest ones because they are so easy to morph, and just like little things can make such big differences when you adjust these. So we'll be definitely keeping the hyperwave in the back of my mind, but as it stands, I'm thinking that we are just kind of getting ready to build some real heavy steam in a parabola. Any questions or anything come to mind?
Not right now. I mean, actually, I guess I got one. I know this is kind of a dumb question, but do you have a price target or a time frame that you're looking for a top to come in, or are you just kind of looking to sell a violation of the parabola?
Yeah, great question. That's something else I had written down that I want to talk about. I think the timing of the market cycles relative to the halving is the most important factor, above and beyond anything else. The biggest moves have consistently occurred 12 to 18 months after the prior halving. That's when you really get the big explosive moves that really generate a significant amount of euphoria, and where price can double in like a month's time. And that's what really gets people's head turned around. And it's hard to deal with these brain chemicals that'll come up. So we're currently about 14, 15 months after the most recent halving, which was last April. So that puts us in a position, just a prime position to really blow it out going into the end of this year. We've got about 4-5 months left in the year. And that is also traditionally a really, really good time for Bitcoin when the market is bullish and we're having an up year. That last quarter is where it really tends to shine and really make some moves. So I think that this year I would be looking for a macro top sometime around November, December, and I'm really like my conservative target is like 250,000. I was expecting significantly higher prices and maybe 6 months ago, but this last 12 months has been objectively the most lackluster price action that we've ever seen following a halving. I mean, like I said, we haven't even doubled from the prior all-time high. So we are that is kind of a concern that I'm sure a lot of people have been thinking about and wondering, like, there's all this buying going on. How in the world are we not really going anywhere? And I think that there's still time. There's still a lot of time on the clock. And one thing that I wanted to kind of point out is that the biggest moves in Bitcoin happen in about a 1 to 3 month time span. Like when you get these big parabolic blow off tops, they don't last more than like 3 months. So that while the clock is kind of starting to tick and we are kind of starting to run out with only 4 or 5 months left in the year, that's all we need. That's all we need for some really, really big price action. So let's just like kind of take a look back. If we look back at 2017, the biggest move occurred in 3 months, from specifically October, November, December. Those 3 months took price from 4,000 all the way up to 20 in 3 months. Nobody could have ever imagined going from 4,000 to 20. That was just such a big move that it would be very, very, very hard to predict or expect, even with so much momentum that took us from 1,200 up to like 4,000, going from 4 to 20 in 3 months. I mean, that is crazy. If we look at the last bull market, we broke our all-time high on this candle, December of 2020, and the entire bull market occurred essentially in a 4-month period. 4 months of markup, and that was basically it. From there, you just had nothing but chop and fake outs, traps. So a 4-month period took price from 20 all the way up to 70. And then that was it. And then if we look at this current market, really 2 months are responsible for the bulk of this move. If we look at February of 2024, that took us from 40 up to 60 in 1 month. And then we followed through a little bit to 70, but the reality was we proceeded to consolidate for 2, 4, 6, 7, like 8 months. We just kind of stayed stuck around that range. And then boom, 1 month of November took us from 70 to 97, kind of sniffing 100. And then what do we get after that? 2, 4, 6, 7 months of just straight sideways price action. So I don't want anybody to really underestimate what can happen in the matter of a month or even more a quarter. 1 to 3 months can really see price double, triple, even more than that. And that's what makes this specifically Bitcoin so damn tricky, when we all know that it likes to go parabolic and that it likes to go parabolic after halvings, but it always does it in a different way, and it will always seem to chop and consolidate for much longer than seems reasonable, or it will fake out and make it seem like structure's breaking, and now it's kind of all over, and then boom, one month will happen, and we can legitimately double price. Let's see, this December took price from 20,000. Let's see, 20,000 to 30,000 in 1 month. That's not quite doubling, but 2 months we went definitely tripled there in a little over a quarter. And what do we do? Quadruple back in 2017. So I think the stage is set for fireworks going into the end of this year. And to answer your question a little better, the timing is, for me, what's most important. It's kind of like wait for the time and just see what the price is. And my kind of range, just based on like some standard deviation and historical precedents, anywhere from 250 to 500 is, I'd kind of move it down to like 250 to 4 is very, very, that's kind of the bandwidth that I would expect the top to come. But it could do so much more than is expected in the 3 months, especially considering that we still haven't really gotten any sort of euphoric blow off top. We are kind of, like I said, in the starting stages of a parabola, but I'm not seeing, as it stands, any of the signs that we're in the later stages. But that clock is ticking, and we'll just have to kind of wait and see what price is able to give us before the end of the year is how I'm thinking about it.
I see more and more often people are kind of throwing the idea around that this cycle could overextend and maybe run into Q1 of next year. I would love to know if you think that's likely, if you think that's just something we see as we approach the end of the cycle. I often say that people start to move the goalpost both in terms of price and time. I think the more the tape turns bullish and the more green the candles become, the more parabolic and vertical the price goes, the more people start to increase their targets and push the goalpost out and say there's never going to be another 4-year cycle and there's never going to be another bear market. So I wonder if some of that is starting to proliferate, but I would love to know, do you think we can actually make it to Q1? Or do you really think that probably by the time this cycle is over, it's just going to look like every other cycle in terms of time?
Well, I would say kind of yes and yes. I think that every cycle is a little bit different than the last. This one in 2021 was way different, with the tail end of it really not delivering any sort of gains, and all the gains coming in the front end. And so there is going to be a deviation, multiple. It's not going to be a mirror fractal of any prior cycle, and that deviation can come with the cycle ending a little earlier than in prior or a little later. But even if we do bleed into Q1, 3-4 years down the line, if we zoom out and look back, it'll still look like every other cycle. Essentially, it'll just be a couple months off, but it'll still basically be like every other cycle. And I do agree with you that as momentum builds and we start getting some consecutive green candles, people will start to really gain confidence and start to extend the goalposts. And I think that's something to be very careful with, because that's what causes the large majority to miss out on their profit-taking opportunities. So while I do think that the posts could be extended, like as it stands, I believe that because of some fundamental dynamics, specifically money printing. The Fed is, the Treasury is going to raise their debt ceiling yet again, and it's going to be already more under Trump's first year than what was raised under Biden's full 4 years. So that is going to put in a lot of gasoline into fire that's already really cooking. And the bottom line is they've gotten themselves in a position where their only option is to print money. Like they have no other option. Their other option is to default on their debt, which they have the option to print more money or default. They're going to print more money, and they're at a point where they've been printing so much money for so long that they have to print so much more every time just to kind of make a dent, that I think the money supply is going to have some sort of real big parabolic blow off that will bleed into gold and Bitcoin first and foremost, that could really cause for a much sharper price appreciation than really has happened in the past, because the stage is set with money being printed by the trillions, and countries and nation states and businesses and Wall Street all adopting. I mean, the stage is set, and Bitcoin, it knows how to dance. So I'm not expecting. I won't be surprised if the tune keeps playing a little longer than expected.
Okay, awesome. And I can see you've got an open tab there for FOMO Finder. Am I right in saying you created that? Is that totally yours?
Yes, that's correct. And that was something else that I wanted to talk about. Like, one of the main things, this is probably the main tool that I use to identify macro tops in real time, because it helps to highlight the basically the premium or lack thereof in futures and funding rates. And this is a tool that has worked really well for, we built it back in, I think, 2020. And I'll explain how it works and why I trust it so much. So the the macro tops, every time they occur with greed and FOMO, whether or not that leads to like an immediate top or is just kind of the first sign of things really getting overheated. The market should stay bullish until we enter a period of greed and FOMO. And that's one of the main reasons why I am so bullish right now and feel so confident that we've got plenty of room left on the runway, is because we haven't even sniffed greed or FOMO this cycle. And in fact, it's been quite the opposite. There's been a lot of uncertainty and doubt. So I'll go into that after just explaining quickly what this uses. Here it outlines basically what it is and how to use it with various technical indicators to provide confirmation. But it's pretty simple. It just uses funding rates and combined with futures premium to give us whether or not we're balanced or getting overheated or at a significant discount. So those that have followed Ugly Old Goat in the past, a lot of this is based on what I learned from him with backwardation and contango. One of the best signals for a bottom is significant backwardation in futures, and that's when futures are trading at a discount to spot. That happens only when the market is really panicking and capitulating, and it's a really strong signal. The inverse is true for tops. When you get extreme contango, where the premiums are like 3, 4, 5 times plus the norm, people are paying way too much for futures, and then at the same time, funding rates will spike to like 10x. Like right now, we see current and predicted funding is 0.01%. That's completely par, completely normal. If that pops up to like say 0.1%, that's a big sign that the market is getting overheated and that bulls are getting overexcited and overconfident. So this FOMO Finder just basically combines these two, and to give us like, to get FOMO, we would want to see like 10x the normal funding and then maybe 5x the normal futures premium. All of this is very par, and that's why we see balanced right here. And for me, this really works very well in real time, which I never found to be the case with the more popular fear greed index. I've never been able to use that. It's just, I don't know what it's based on, and it gives some really bad readings a lot of the times, in my opinion. And furthermore, it doesn't have a historical chart that you can use to kind of go and back test. So if you scroll down, you'll see this chart, and it shows every signal from since 2020 on a chart, so you can kind of see. We'll zoom in. So let's take a look at right in here when we were trading at like 68s, kind of retesting the prior all-time highs around the halving. This was last March. Notice how the market was really getting overheated, and we see the orange, which is that's greed, not full-on FOMO, but it's greed. It's getting really overheated. And those of you that remember the halving, I mean, I remember it. I was feeling it. I mean, the market was exuberant. We were retesting all-time highs going into the halving, which we'd never really done in the past. That was extra bullish, and everybody was just ecstatic. And that quickly caused for a prolonged top. That over leveraged and greedy buying led to a prolonged top, but it was quickly met with panic at the bottoms. And I remember that too. This was when we fell back down to like below 60, got full panic readings each time at the bottom. And then this last move up to 100K, we all remember what that was like. It was ecstatic. I mean, we were trading at 100K, 6 figures. Are you kidding me? This is insane. And sure enough, the FOMO Finder showed us getting really greedy. And again, it led to another multi-month consolidation kind of top that, again, found panic selling at the bottom. Now, what's so different this time around, we're getting the panic selling, but we're not getting any FOMO buying or greedy buying, and it hasn't even been close. I watch this thing every day to see, like, are we even getting close? no, it hasn't even really. I haven't even really seen it enter this canary call, which would be like saying, all right, keep an eye out. We've just been either panicked, uncertain, or balanced. And that is a really strong sign to me that bulls are in disbelief and or bears are getting a little overconfident. So this is probably the most important chart for me in terms of really identifying where macro tops and bottoms will come based on emotions and the funding and futures premium or lack thereof.
I don't know if you know this, but we on the channel used to use the fear and greed every once in a while, mostly just when it got to extremes on either side. But what we noticed was it wasn't actually very good. I know you kind of said that earlier that you don't think much of it, but we ended up scrapping it and moving to FOMO Finder because this thing was just so much better. And something else that I thought was fascinating was I used timing cycles, and I track the daily, the weekly, and then the major 4-year ones. But we have started for the last, I don't know, 4, maybe 5 weekly cycles. We started tracking the weekly cycles with FOMO Finder because what we noticed was it will tend to slip into panic on every single one of those weekly cycles, and that gives us like a really useful piece of confluence to say that that probably is the weekly cycle low there. We've got the slip into purple. I was pulling up that chart you were showing. My viewers have seen it hundreds of times because we pull it up when the weekly cycle is there, and I go, there's no purple yet, and then sure enough it shows up, and my followers will type in the comments like, oh, there it is, there's the purple. It's like, yeah, we're getting close. So yeah, man, I'm a huge fan of that FOMO Finder. So well done. I have no idea what happened to the fear and greed index. We were even starting a tinfoil hat conspiracy at one point because we were suggesting they might be manipulating it to try to create like an illusion online or something with it. I don't know if there's any truth to that. It was kind of a tinfoil hat conspiracy, but it seemed to lose all of its power and relevance some time ago. So I'm really grateful to have that as a tool. It's a super, super useful thing, and I know my followers are familiar with it.
Well, that means a lot. I don't really see it popping up much anywhere else. I didn't realize that you guys are consistently taking a look at it. So really, really glad to hear that, and glad to hear that it's been working for you. And yeah, I'm on the same page with the fear greed index. That is kind of what inspired this. And when I tried using it, it never worked, in my opinion. And I'm certainly open to all tinfoil hat conspiracies. Like I've always kind of thought, like if this thing did actually work at all, they'd show a historical chart with the signals. Like otherwise they can just kind of make it signal whatever they want whenever they want, and for some reason it's still really popular, but hopefully more people will start testing out the FOMO Finder, because I really do think it works night and day better.
Yeah, I absolutely agree. It's a fantastic tool. What else have you got in the tabs to show us?
Let's see here. Okay, covered the majority of what I was wanting to talk about. We'll just kind of touch back on this chart here to kind of just wanted to point out that I think a lot of people are concerned that we are turning into a fractal of the 2021 cycle. I mean, if we look at this price action here compared to here, it does look like a cause for concern. And one of the main reasons why is that generally, very consistently in the past, whenever Bitcoin has broken through all-time highs, it's just exploded. Like this was, I think, basically the first time that we made new all-time highs and then didn't go anywhere. So we've got a lot of that in our memory for anyone that's been around at that time. And while the price does look like this, I think the price is just kind of trying to feign like it's doing another bull trap and trapping us in at and establishing another multi-year top to really disincentivize speculators to keep the least amount of bulls in the market, or the most amount on the sidelines, if you will. So the main reason why I really do not think that this is a fractal of this, there's a couple of reasons. First of all, we already had like a 90-degree move in Bitcoin that really blew off the top, and this is what followed that. So far, we haven't gotten anywhere close to 90 degrees. We're still down here at like a 45-degree angle or so, which is why, again, I think it's the early stages of a parabola, because the ending stages tend to get more 90-degree, and the middle stages maybe more 60 degrees, specifically if it's following somewhat of a hyperwave structure. And the main reason why I don't think that this is going to be a fractal is what we were just looking at with the FOMO Finder. The dynamic with the FOMO Finder is completely different this time around. Let's see, this is a little tricky to zoom in on, but I'll get it. So when looking at the FOMO Finder in the last cycle, I mean, we entered greed pretty early on and kept on going to full out FOMO that started occurring like above 50,000 or so. So this was a lot of, the market was like kind of getting overextended already at like 40,000 with, I remember the futures premiums was at like near 10%. I mean, it was really high, and the funding rates were really high. And there was just, I guess, so much demand and so much momentum that it was able to sustain that and keep pushing higher. But that is way different than the dynamic that we have looked at recently. We haven't seen any FOMO buying. Just look how different that is. We've had just a little bit of greed, which has been properly grinded out of the market immediately. So like, this is what I would want to see in a healthy market. In 2021, it entered greed and just kept on going. That ain't healthy. That's like a blow off. This is ideally healthy, where you get greed at the top and then panic at the bottom. That fully resets, and like all but guarantees those that were bought in on FOMO and greed at the top puked the bottoms, all but guarantees. And same thing happened here. So we no longer are a market that is stained by these greedy buyers because they got chopped out and they got stopped out and liquidated and all that. But back in 2021, we still had like greed and FOMO like getting rewarded basically for months on end, and that is just going to last until the last buyer comes in, sort of thing. So this, in my mind, is way different than what we saw in 2021. Even though the price action is kind of trying to pretend that it looks like it, the dynamics of the buying are completely different. This market has right now strong-handed bulls. The bulls are the strong hands. They've been buying at discounts. They've been potentially taking profit when it gets a little overheated. And this is a very, very healthy market where the bulls are the strong hands. The last time around, that really wasn't the case. So just wanted to kind of take the time to touch on that, as we are kind of taking our time to break through the highs, which is not a good sign. But I think it's just kind of a fake out, and it's more turning into like a inverse head shoulder that, if we do break out, could be used to sort of measure the next measured move, which would be around 143 or so. That is getting ahead of myself, as we certainly have not broken out yet, but we are at the perfect time, and we're starting to make some moves at a very good time. The timing of the month is something that I think a lot about. The middle part of the month is when the bulk of the real price action should happen. The beginning and the end of the month is when it should get kind of start to correct and or get really choppy. So the meat of the month is really going to be like the middle 20 days, and like the first 10 days and the last 10 days are generally not going to be like the real price action. It's going to be more choppy and more corrective. So right now we're on the 9th of July, which is putting us in a perfect time window to really make some big moves in the next weeks to come. And if we can break out of this multi-month range, we should be in a perfect position for a few really, really strong months. So fingers crossed.
That's really cool. That's really cool. So you're actually a lot more bullish than. I mean, I've spoken to quite a few people. You seem amongst the more bullish, I think, that I've spoken to, which is encouraging. Are you Bitcoin only? Do you track any altcoins?
Yes, I do have a handful of altcoins that I'm very interested in and don't really talk a whole lot about. Sometimes when I'm buying alts, I'll generally add a little section at the end of the weather report, like an altcoin alert sort of thing. But I'm tracking some alts. The majority I am trading. There's only I think two that I'm actually like investing in for a long term. Um, so yeah, I'm a Bitcoin standard bear is what I like to call myself. Not necessarily a maximalist. I do think there are other applications for blockchain, and I do think that not every blockchain application should be built on Bitcoin. I think Satoshi gave us the perfect money, and it's up to us to not fuck that up. Excuse me. So I don't. I used to think that, oh well, if it needs a blockchain, well, Bitcoin. And now I no longer think that because some of the other applications, if we start putting them all on Bitcoin, it will bog down the network. It'll make it too cumbersome. And Bitcoin is money. And I think I kind of view some of the others as more like stocks and blockchain companies that I think are valuable. Like for example, a decentralized exchange, I think is very superior in just about every way, especially now to the point they've gotten. In the past, they were really hard to use, really clunky, really low liquidity. But now I think that there's every reason that decentralized exchanges will be the future of exchanges. And it's very early on that path is my opinion.
Understood. I'm kind of similar in my approach. I people call me a Bitcoin maxi often, but I actually hold one altcoin in size, and I don't really talk about it. There are some OG followers of mine that know which one it is because I let it slip drunk on a podcast one time, but that podcast didn't get many views. So for the most part, people just think I'm a maxi. But yeah, we're pretty aligned on that as well. So I'm a bit conscious of time. Are you okay for time at the moment?
Yeah.
Do you have anything else you want to show us? Is there? Do I see a liquidation heat map at the moment at the top on the left?
Yeah, that's something else that I will look at every day in the weather report. I think it's something that's really good for intraday sort of targets and liquidity pockets that will consistently get hunted day in and day out. So I use, just go over the setups. This is coinglass.com. Over at the left, it's liquidation heat map. I use Model 2. They've since developed Model 3. I've never really messed with it because I'm very fond of Model 2. It looks nice and it works really well. And then I use Binance and specifically the 3-day. And then basically look for yellow liquidation levels. If you hover over, it'll tell you how much. It'd be like 40 there. 40, 80, 120, 160. So there's like maybe $250 million of short liquidations that was just taken on Binance alone. And I use this a couple of ways. I primarily expect price to take liquidity here and then immediately reverse as it starts to swell on the other side. That's what will happen probably 80% of the time, is it'll just ping pong back and forth between liquidity levels, swiping out both bulls and then bears, and bulls and then bears, as bulls get kind of over leveraged as price moves up. Bears get swept, and then the whales will step in and take that liquidity. Generally, if this is a short liquidation, they're forced to buy. So generally, there's going to be some big whales that are ready to sell it to them, and that's what will kind of cause it to ping pong back and forth. When it pops right through, that's something to pay very, very close attention to. And that's signaling to me more of a real breakout. And I would expect when you pop right through a big liquidity pocket like that, that level is expected to turn back into strong support. Because anybody, so say the whales that were taking these liquidations, so they're buy liquidations that the whales would have been selling into. Now the whales are on the wrong side. They're going to be buying that back around break even or maybe at a small loss. When it really shoots through those liquidation levels, it should pull back and test that for support. And there should be a lot of support waiting there from the whales who fade the liquidations on a daily basis. So I would really be paying very close attention to 109 to like 110.5 turning into strong support in the day or two to come. And if it does, that will lead to clear skies ahead, in my opinion. So great model here. Something that I would encourage everybody to at least test out. This is nothing to do with me. This is CoinGlass. Just something I stumbled across years ago and really like. One other thing that I just wanted to show, which your followers may or may not be aware of. But on the website, alphanalysis.io, just one A in the middle, Alphanalysis. All the charts that I use that I'm looking at on a daily basis are available for free to anyone who wants to come take a look. And that's what these charts are up here. And these are all the exact charts that I cover in the daily weather report. So if you see, you got the MSR 1 hour, MSR 4 hour, EXA, and CMA charts. So these are going to be your charts, and then the tabs are going to tell you exactly what they are and how they're used. So say, click on EMA exhaustion, and that'll take you to a just a little tutorial. It's all for free that just kind of tells you what it is and how I'm looking to use it. So then if you pull up the EMA and CXA chart, it's also the exact time frames that I use them on. So I really like this for anyone to have available. Let's see here. So clicked on that, pulling up this tab. My internet's moving a little slow today, but it'll load eventually. So here we go. This is my weekly chart that I'm looking at, paying very close attention to. We were watching very closely to see this LSM turn into support, which it has. Now we really want to see this weekly close above the too high MA. If it does, I mean, it's really would be a confirmed breakout as far as I'm concerned, just closing above this too high MA, which would very likely be a close at new all-time high prices. And then down here's the EXA that we're waiting on a recross for. And over on the daily, I got to adjust this. We have been supporting very nicely above 50 in this last consolidation. So that's been a very kind of hidden bullish sign. And now we're getting this EXA cross here, and we're going to, looks like, hopefully get a very favorable daily close back above all the critical areas. So you've got that. And then, as mentioned, MSR, it is an indicator that is paid for. But I provide all Bitcoin signals on the 4 hour and 1 hour. They're available for free here on Alphanalysis. So if you just, I'm not going to load up a new one since it's taking a little bit, but if you just hover over, click 4 hour, boom, this will pop up. We can see our most recent bull trend signal occurred around 97,000, we'll call it. And now we are still in the very early stages of this trend with partly cloudy skies above, but not a problem there. And then the 1 hour has just made an explosive move through the very critical area. So now we have a full bull trend on the 1 hour MSR, on the 4 hour MSR, and then on the weekly, we are basically looking at being fully bullish after today's close, as long as we don't give too much up. And same goes for the weekly. We're right on the verge of turning that fully bullish, and that's when I really start to get excited and sit up in my seat, is when all of the time frames and all of the indicators start to indicate the same direction. That's starting to suggest that a real trend is in the works, and that we're in the early stages of it. And specifically, when that's confirmed by the FOMO Finder, that could invalidate everything. If the FOMO Finder was getting greedy or even FOMO as we're retesting highs, everything else goes out the window. And I'd say that watch out for this being a real top. But as it stands, all of my trend following tools are pointing, starting to really be in confluence together, pointing to the upside. And the FOMO Finder is firmly in agreement with that. So that's really makes me sit up in my seat, as specifically with the timing of the year. This is the time that we really need to make some moves, and it's starting to show signs that it's ready to. So for anybody that wants to keep an eye on these charts, it's at alphanalysis.com under the charts tab, and then each of these tabs will just have a brief little tutorial that explains what they are and how I try to use them.
I'll be sure to put the links to everything, the Alphanalysis, the weather report, Twitter, all of that. I'll make sure I put all the links in the description and the pinned comment of this video.
Great.
It's funny, you know, I've been out of the house. I went to the gym for a few hours and blah, blah, blah earlier on. And when I came back, I literally just came back, sat down, turned my computer on, and then zoned into this. And it's actually quite surprising to me how much these charts have improved in just a few hours. We are really starting to potentially, I think, get a legitimate breakout by the look of it, as you were saying. The problem with Bitcoin, I think, is I never really trust it until after the fact, right? I take some trades or whatever, but I think anyone that has been in this space long enough knows that it loves to break people's hearts, right? So I never want to go counting the chickens or whatever the expression is. But objectively speaking, right now, things are looking pretty good. We're late enough in the cycle to hopefully start to cover some ground. So hopefully there's some exciting few weeks or perhaps even months ahead of us from here.
Yes, hopefully. And that does remind me of one other chart. So something else to just keep an eye on that does make this, like, we're kind of, what it likes to do is, like, how I think of it, it likes to tiptoe right to the edge of a cliff, kind of look over, kind of pretend like it's stumbling over, and then boom, shoot. That's when it'll make its biggest moves, right when it's at its biggest periods of indecision. So I do think, like you said, that these last couple hours have been rather critical, and this trend line has been something that I've been paying close attention to. And before these last couple hours, it was getting really suspicious because let's just take away today's candle. We came up to test this high, and we kind of wicked off of it. Kind of starting to really look like a fake out above the trend line, like it's really ready to break people's hearts again. And then this was really starting to look like a lower high. We had this pivot point that rejected this prior all-time high, and then we get another pivot below this high. So it's starting to look like a kind of like a double top, lower high, fake out above the trend line. And if we, what I've been saying is, if we really fail to follow through above 110 in like this week, then it's going to really start to look like the next move is going to be revisiting the range lows around 100,000. That has really, in my mind, it's not all changed, because this could still close down here. And now we've got an absolutely just nightmare wick. So there's still a few hours to go in the day. So I don't like saying anything too much until there is a close, because a lot can happen before the close. But as it stands, as long as we're closing above 110.5, above this prior high, I think that all of the ingredients are there to start calling this a real breakout. And that I am thinking that is confirmed. I always like to check this RSI, because I do think it's a leading indicator. Specifically works really well when you're looking at trend lines. Anytime that you're thinking that price has broken through a trend line, I would always expect the RSI to go first, because the RSI, as price will kind of fake out around the highs, it needs to be building strength underneath the hood. And that's exactly what we see here. We see the price is already, that the RSI has already broken out of this trend line, thrown back to it, reclaimed 50 as support, which is where the bullish price action happens with the RSI above 50. So this RSI is also looking really bullish and providing good confirmation of a real breakout opposed to a heartbreaker.
With a bit of luck, we can take out that prior high, and it should be off to the races, right? It's dangerously close. But as you said, you always want to wait for the daily close, and then my rule of thumb is a daily close and then 2 more candles. That's what I like to see, and then I can start to say, okay, maybe this thing's for real.
Yeah, I like that. And are you familiar with Fiboswani?
Loosely, yes.
He uses a 3-day rule where he looks for the first close and then 2 more closes to confirm. And I think that can be a really good way to avoid some of the most vicious traps. And I think about that quite a bit myself, is the waiting for 3 days to close. And in the first kind of when I first started doing that, it's like, well, shoot, by the time 3 closes have happened, the price has already left me behind. And if that really is the case, if you get 3 consecutive closes that are really strong, then there's probably gonna be a nice little pullback on the 4th or 5th day, and then you're in a position where you can be highly confident that the breakout is real and look to buy a little dip, opposed to looking to kind of buy a breakout around resistance that could be a fake out, that sort of thing. So yeah, I really like waiting for 3 closes and just reminding yourself that it's okay if it leaves you behind for 3 days, because when it does make those big 3-day moves, it has a big propensity to get a nice little correction in the days that follow.
Yeah, I also really like it on trendline breakdowns as well. I've found that if I get a trendline breakdown, I think, okay, time to pay attention. But I always like to give it 1 or 2 days of wiggle room, because I can't tell you the amount of times that I would have sold a position only to see it actually fake that trend line out and then move higher again. So I always like to take my time on the breakdowns. I would say more so on the breakdowns than the breakouts. But
I agree that can be the hardest thing to identify, specifically with Bitcoin, is when thresholds are being tested, if they're being rejected or if they're actually being broken. And right now we're experiencing it in real time. I mean, we just made a sharp 1-hour move that shot from 109 back to the prior all-time high, and it's already reversed a little bit from there. So this is a perfect example of when it's like, well, is this a real breakout? Are we just going to resist the prior all-time high? Are we going to actually be able to make another big move following this move above that trend line on the daily? That's where that's why you just have to have an objective system that takes it kind of out of your subjective view. If you're looking to actually actively trade and speculate, you can't be doing it just based on, well, I think this time or I think that time. No, it's got to be fully objective. It's got to be ahead of time. It can't be something that you come up with now in the moment of, oh, well, this is an objective signal that I've never used before, but I really want to get long now, so I'm going to say that's the reason why I'm going long. No, it's got to be sticking to a system and understanding that sometimes you're going to get signals that seem perfect that just completely fall apart and roll over, and you buy the exact top. And then other times you're going to have to wait for further confirmation and maybe not get quite as good of a price as you want. That's really the only way to tread in waters like this, where whenever you're certain, it's either too late or it's exactly the wrong side that you're certain about.
I've often found some of the trades I feel the most confident about are the worst, and some of the ones that really make me feel uncomfortable in pressing the buy button, for example, those are normally the ones that turn out the best.
I can't tell you how true that is. I've heard that from almost everybody. I don't know anybody that really disagrees with that. It's mind-boggling how the market is able to do that to us. Whenever I get the most confident signals, it's almost guaranteed it's the worst strike rate, compared to when I'm like, I don't really like this one, is when they tend to do the best. And it just goes to show that no matter how much experience you have, even with trading an objective system, your subjective perspective, it has a incorrect tint to it. It's not it's not helpful. It's almost the opposite, and it's crazy how that is.
Yeah, funny enough, this current before I came back from the gym earlier and saw this big candle, I was actually leaning on the side that we weren't going to get this just yet. We were going to have to waste quite a lot more time consolidating. So I don't know. Read into that what you will. Hopefully that means that this breakout is going to end up being for real.
Yeah, yeah, and I guess right now I'm feeling medium confidence. I'm feeling like, yeah, there's still a very good chance that we are still in a range, and the sharper that you move to retest resistance without following through immediately, the more kind of suspicious it gets. It's that sharp nature of the chop that is really tricky. It's like when you're really chopping, the sharpest moves happen really quickly that go to the highs that really make it look like it's a real breakout. So I'm not really in love with such a sharp move that doesn't just completely melt right through, that actually is showing signs within an hour of kind of pulling up around a very obvious level of resistance that is the prior all-time high. So at least I'm not feeling overly confident.
Well, thank you again for being here. I really, really appreciate your time. It's really, really awesome to meet you. It's really awesome to see you use the FOMO Finder and discuss the hyperwaves and stuff in real time. So, like I said, I'll put all your stuff in the description and stuff like that. Is there have you got any closing words or anything you want to show us before we go?
Let's see here, make sure I got to everything. Yeah, I guess just closing words or thoughts are just how critical these next few months are. If we really zoom out on things, I think these next 3-4 months are potentially the most important months in Bitcoin's history, at least since it was valued over a couple bucks. These next few months are absolutely monumental, I would say existential, for the future of Bitcoin. And the reason is that we really do not have much experience with Bitcoin being around in a real risk-off environment where it's proven itself in a risk-on environment when stocks are mooning and everything's all gravy. Yeah, Bitcoin has outperformed everything, and in a big way. But we've never had Bitcoin in a multi-year bear market in traditional finance. It's just never happened, and that is there's been kind of some of this price action has been really, really worrying me over the recent months relative to traditional finance and gold. As war has continued to escalate around the world, and we've started to see some cracks in stocks and bonds as well, gold's been cooking, and it's been doing exactly what it always does. In times of war, people buy gold. That's just what happens. And we don't know what's going to happen with Bitcoin. Is it mature enough to take that spotlight of actually being sound money? And what's most important is, do enough people trust it? Has it just gained the current valuations based on speculators and people looking to make a quick buck? Or has it actually gained this valuation from people who truly trust it in a time of crisis, who truly want to own physical Bitcoin more than anything else, maybe excluding gold? So what's been kind of concerning me, specifically 3 months or so ago, was that as gold was really starting to cook, Bitcoin was really starting to follow like tech stocks and risk on assets. And it has been struggling to kind of decouple itself from those traditional flows. And that's why I think it's like existential. If Bitcoin's able to step up and really prove itself in a time when people are buying it because they're scared of debasement and they're scared of property confiscation and they're scared of war and being able to just maintain sovereignty of their wealth, that's why people need to be buying Bitcoin. And if people are only buying because they don't really understand the core value propositions, they just have seen what is done and they just see it all over the news and hear people talking about it, and they just decide, okay, fine, I'm gonna buy in to try to make a quick buck. That's the question that's going to be answered in Q4 of this year, because things definitely don't seem to be getting any better on a geopolitical scale. And if things continue kind of escalating, we're going to need to see if Bitcoin peters out from a lack of really convicted long-term buyers and holders. That could lead to a like this being a macro top, and it could lead, and if it is, and we have a new 3-year bear market from here, I mean, it could take prices so much lower than anybody can really imagine, and it would be probably deservedly so if if the market isn't mature enough to really recognize it for what it is and to put their money where their mouth is when it's a risk-off environment, when it's a time where you're concerned about things opposed to having a fear of missing out on the next leg up. So that's kind of the main thing that is in the back of my mind, and is probably what's making me so bullish now. Is these last few months, Bitcoin really has started to kind of more follow in gold's footsteps, and it kind of has started to decouple a bit from the risk on stocks, and that's really exciting to me. And that's probably the most important factor at play as it stands, because if Bitcoin really can decouple itself through true believers and convicted long-term holders during a time where everything else is falling apart, well, that's when the limited supply is really going to sink in to a lot of the world, and that could lead to a much bigger move than expected, and as well as a much longer move than expected. If Bitcoin moons while everything is falling apart, it's going to moon so much harder than ever before, because it'll be like one of the only safe havens left in the entire world, and there's so little of it available that, I mean, I don't think I have to say much more. So, yeah, I guess that's all I got to say.
Well, thank you very much for that. I guess what you're saying is we're moving into a trial by fire period potentially, and yeah, I was kind of thinking about this deeply as you were saying it, and I truly believe that the market has figured it out. I truly believe these institutions are not just using it as like a high beta tech stock. I really do think that they've kind of figured out what this is, and they're moving to use it as what it is, which I believe is the ultimate risk off asset. It is, even though it trades in a correlated manner to tech stocks and stuff at times, and sometimes it trades, correlated to gold. Under the hood, I think it is totally decorrelated. I don't think it actually pertains to anything else. It can do its own thing when it chooses to do its own thing, when the market in aggregate wants it to do its own thing. So I'm looking forward to hopefully getting to that stage. I hope I'm not wrong about that. I really, really do hope I'm not wrong about that. But I have faith. I have absolute faith in this thing. I think it would have failed by now if it was going to. So yeah, I'm looking forward to seeing what happens.
I agree. I agree fully. And yeah, it'll be time for popcorn, and only time will tell. And I think whatever happens in this next quarter is kind of going to be a hairbringer for what's going to happen in the next maybe years, if not decades to come. This could really be where hyper Bitcoinization actually happens, is in a period of uncertainty and doubt, and when everything else is falling apart. That's when the entire world will be extremely incentivized to move to a Bitcoin standard, and we're already seeing the first kind of writing on the wall of that happening. So let's go Bitcoin.
Absolutely, absolutely. Well, I can't thank you enough for being here. It was really, really great to meet you. I will put all the links in the pinned comment and description, as I said a million times. And hopefully we can get together another time, sometime in the future, one day maybe, when Bitcoin is significantly north of here. And we'll look back at this time as hopefully that moment that Bitcoin broke out and began its run to the top. So thank you for being here again. I really appreciate your time, and all the best. Take care. Cheers.
Cheers.